Hi, everyone, and thank you for joining us. We're excited to welcome Tyler Bollhorn, who is the founder of Stockscores.com and is the author of The Mindless Investor, Making Money in the Market by Overcoming Your Common Sense. He has been a professional stock trader for over 20 years, utilizing his unique approach to find market-beating stocks by focusing on abnormal trading activity. Mr. Bollhorn, thanks for joining us. The floor is yours.
Well, thank you, and good morning, good afternoon, wherever you are. In my part of the world, it is morning still. We are going to talk for, I guess, half an hour, and I'm going to take you through a very simple concept that is behind my trading strategies, whether I am day trading, swing trading, position trading. Everything revolves around one simple idea, and that is what we're going to talk about today. So, as Stephen said, my name is Tyler Bollhorn. I'm the founder of Stockscores. I've been a professional trader for about 30 years. I've been teaching others how to trade with my method for about 20 years. And today we're going to talk about what I feel is the secret to making money in the market. As I said, it's the basis for all of my strategies. There is a simple thing that happens on almost every hot stock, whether it is a day trade that runs for a couple of hours, or whether it is a long-term trade that lasts for a couple of years. This one thing tends to be there all of the time, at least 90% of the time. And most of my strategies are based on this one thing. It's easy to learn, and if you have the right tools and methodology, you can identify them in a timely fashion. So what I'm going to do today is show you what that is, and then show you the tools that I use to find it. And as I said, you can use this thing whether you are a day trader, a swing trader, or a position trader. So let's begin with day trading. What is day trading? Day trading, very simply, in and out of a position within a day. We don't typically hold overnight when we're day trading. This is primarily what I do. If you look behind me, you can see all of my screens behind me. That's my different analysis software running. I use something called TradeStation, and I've written specific indicators for TradeStation that are running automatically. And I watch the entire US stock market in real time. I also trade the Canadian market, but I don't really day trade the Canadian market, mostly longer term trading. What I love about day trading is it's just this great way to work from home, and you can really do it anywhere. I've had the good fortune of living in Maui on the ocean. I've lived in Whistler in the mountains. I live in a beautiful city in Canada on a lake. There's a lot of freedom that comes from trading. You can live anywhere. You can choose to work if you want to. If you don't feel like working that day, you don't have to. And so it's really a great lifestyle. Sorry, I just had to turn around and make sure something wasn't breaking. It is market hours are on, of course, so I have to watch the market a little bit. You might see me turn around every once in a while just to check on things. All right, so this is my typical day trade. This is one from today, and the entry signal came this morning right here at, oops, sorry. Just got to get my pen tool out here. So our entry signal was right there. I'll explain what that is in a moment, why we would do that. But in this case, the stock has moved up quite sharply. As you can see in the course of so far today, it has gone from about $12.60 up to where we are now. It's currently at around $14, but it actually hit $15 this morning. All right, so that's my typical day trade. I'm looking at a 2-minute chart here, and we look for certain things, which I'll elaborate on in a moment. Now, swing trading, we're in and out of a trade within a few days or weeks. It's a great way for someone to make some extra income if they only have an hour a day, maybe 2 hours a day. Flexible, again, you don't have to do it every day, so it's nice in that regard. The signal, again, is the same. You'll notice that there's these pink dots on the chart. I'm going to explain what those are soon. But this was our entry signal yesterday on Aurora Cannabis. And it too has had a beautiful move. I think it's up 60% today. It's currently up 75% today, but yesterday was even up from the entry point. The entry signal was about 550 yesterday. Currently it's at 1097. So same signal. And again, I'll show you that in a moment. And then we have position trading. That's longer term. This is what you might do if you're managing your retirement portfolio. The process for my strategies takes 15 to 30 minutes per day or per week, depending on the strategy. And again, we start with a certain signal, and this stock gave the signal right here. This is a stock listed on the Canadian Stock Exchange, BRP, which makes Sea-Doos and Ski-Doos. And it's had a great run from there at about $32. Now we're at 75. So what is the signal? What is the secret? Well, I'll give you the background and how I came to do this. Many years ago, when I was in business school, I decided, or I was in a class where we looked at if there was evidence of insider trading on stocks that make big jumps on the announcement of a merger. So if one company was buying another one, the stock may have been trading at $10. Of course, when they announced that there's a buyer for the company, often the stock might jump to $15, $20, because typically in a buyout, the buyer is paying a premium for the company. And so if you knew about those buyouts beforehand, you really had an advantage to make a lot of money, because you could get in and then sell when the news came out. And this was, I remember I'm in university back in the late 80s, early 90s, and there was a lot of buyouts on Wall Street. And so what we looked at was if there was evidence in trading activity that some people were trading on inside information. And we did statistical analysis, and we developed these algorithms way back before algorithms were cool, that considered whether the market had evidence of insider trading. And on almost every deal, every major merger or acquisition back in that time, almost every time there was evidence that somebody knew something before the news came out. And so I graduated from university. I have a degree in finance, and kind of forgot about that class. And then one day I was trading the stock market quite a lot already. I thought about that. I thought, why don't I take that concept and apply it to penny stocks? I remember I'm just out of university. I didn't have a lot of money. And so I was focused on lower price stocks at the time. And so I dug up my old notes from that class and found the math and built an Excel spreadsheet that calculated for the same statistical analysis that we had been using in that class. And at the time I lived in Calgary, which is in Alberta, Canada, and I would go down to the Alberta Stock Exchange where they had real-time quote terminals. Back then it was hard to get real-time quotes. It was very expensive. Nowadays, of course, you can get that free or very cheaply. So anyways, I would hang out at the Alberta Stock Exchange and I would do scans on their real-time quote terminals looking for the stocks that met my criteria. And then I would race home, plug those stocks into my spreadsheet and look for the abnormal activity. And that's basically how I started with this whole process, which is basically still the same as I do today. Nowadays, I'm a lot more sophisticated. I've built much more sophisticated and expensive tools, but conceptually, it's the same thing. And if I could say the one thing that I learned in business school that was useful was this, and that is to look for statistically significant abnormal activity. And so we can analyze a market or a stock and gauge whether the price gains or price losses and whether the trading volume is abnormal. And what I have found is that most market beating stocks, in other words, those stocks that go up really strong for the day, for the week, for the year, most of those stocks will start their market beating trends with abnormal price movement and abnormal volume. Now, the question is why? Well, we have to think a little bit about what's going on in these stocks. The reason that those mergers and acquisition stocks went up is because there was significant news that justified the big jump in price. But what was happening in the weeks leading up to those news announcements is these stocks started to trade abnormally. They started to make price gains that were bigger than normal and trade with more volume than is normal. Now think about human beings. We love to make money. Greed has an effect. And so if you were someone that had better information than others, you might take that information, go into the stock market and buy the stock aggressively. And if you were a large investor, maybe a hedge fund or a large mutual fund, armed with this preferred information, private information, inside information, whatever you want to call it, you would leave a trail for others to follow, because you might go into the market and buy 1 million shares over the course of a few days, accumulating that stock, knowing that there was good news coming and you wanted to take advantage of that good news. And so what ends up happening is the people that are trading on this better information leave footprints because they create the abnormal activity and the abnormal volume. They are pushing the stock up in price because they are buying it aggressively. And the reason they're buying it aggressively is they know something that the rest of us don't. Now, I will tell you that within every stock, even today, there are always some people that have better information than others. And armed with that better information, they create the abnormal activity that the rest of us follow. And it doesn't have to be inside information. You could simply be someone that follows a company very closely. For example, Aurora Cannabis. If you follow that company and the industry closely, you will know that there was an election and certain states were casting ballots on whether cannabis should be legalized in those states. There wasn't really any great inside information, but you had to really know the industry and know that that was underway. And so people ahead of the election were buying cannabis stocks in anticipation of a positive vote. And if you're a big hedge fund, you might do your own polling. You might spend $100,000 on polls to go into the states where a cannabis decision is on the ballot and gauge what people are likely to vote. And so by doing that extra work, you are almost generating your own information. So what we know is that most market-beating stocks begin their very strong trends with abnormal activity. However, not all abnormal activity leads to market-beating moves. And so we have to have some other methods and processes to focus on the stocks that have the very best potential. And fully recognizing that we will be wrong some of the time, and when we are wrong, not take big losses. So this is sort of the logic of my approach, where I'm using abnormal activity to tell me the stocks to look at, and then I use some basic chart pattern recognition to eliminate those that have a low probability and focus in on those that have a high probability. And then once I'm in the trades, using good risk management to take small losses if I am proven wrong, and otherwise stick with the trade. Can you hold on just a moment? Sorry, someone. Hi. Oh yeah, I'm just on a webinar. Okay, super, thank you. Sorry, everyone. I don't know if you heard, but I work from home and there was a courier knocking on the door. So anyway, back to where we were. Sorry about that. So what I do is I've developed my own tools and indicators to look for abnormal activity, because the things that come in your typical stock market software, websites, that sort of thing, they're not doing this. This is something unique to my approach. And although I've been doing it for 30 years and it's not really that complicated, I still don't see anyone doing this in the way that I do. So when I'm looking for position trades and some swing trades, I use the Stockscores website, which I'll try to show you if we don't run out of time. And when I am day trading and swing trading, I use TradeStation. So behind me here, if you can see with the camera, that's TradeStation running in the background. I've got 3 40-inch monitors behind me and a couple smaller ones. And it's running algorithms and macros and indicators that I've created for TradeStation. And it's looking for what I call an action candle. So if we go back to these charts, every time you see a pink dot on this chart, you have a action candle. An action candle is very simply a bar, a candle on a chart that has abnormal price and abnormal volume. So if we look at this candle right here, which is the one with the pink dot, you can see the pink dot right there. You can also see that the volume was higher than normal, and the height of that candle is taller than normal. Now, up until today, the stock was pretty quiet. Yesterday afternoon, it was very quiet into the close. This morning, it opened with strong volume. So already we can see that something is going on that has investors excited. Now this chart is generated from TradeStation. I don't have anything to do with TradeStation. It's just a software program that I use. But what TradeStation allows me to do is program my own indicators. And so I programmed this action candle indicator. It's something that is available to my students, but otherwise I don't distribute it. You have to be one of my students. I'll talk very briefly about that at the end of the presentation. All right, so that's the buy signal. Now, remember I talked about risk management, and that's equally important. So if I can just erase all the lines on here, we're gonna just go back to explaining the risk management component. So if I buy this stock right here, that's at 12.61 was the entry signal price. And we've got support here at $11.85. And again, that's all automatically derived based on my algorithm. So I know that if it goes down to 11.85, I should get out and take a loss. So I'm going to size my position based on that risk. Now you can also see that there are lines on this chart, and these are called risk reward lines. And again, it's all generated by my algorithm, which is something that we use every day in a service we offer at Stockscores called Active Live. And in Active Live, I'm looking through every US stock, looking for action candles, and then we calculate the reward for risk multiple for that trade. So suppose that you were willing to take $100 of risk on this trade. What happened was each one of these lines here represents a multiple of risk. So if you took $100 of risk, at line number 1, you're making $100 profit. At line number 2, you're making $200 profit. And at the high of the day, which was up here, a couple hours after the entry signal, you're making $900 of profit. Now we had a sell signal on this trade right here when it broke the upward trend line from a falling top. That's one of the things we look for as a sell signal. And so at that point, we get out at a 6 times risk, or a $600 profit for every $100 of risk. Now the capital required to do that trade, just quickly doing the math in my head, would be, the position size would be just a little under $6,000, but you leverage these 3 to 1. So you would require $2,000 of capital. I'm just rounding it off and calculating in my head fairly quickly. So $2,000 of capital in order to do this trade to make $600. So that's an excellent return, obviously, in just a couple of hours. And this is without knowing anything about the company. I don't know anything about this company. I have no idea what they do, really don't care. All I know is that the people that know this company the best, that follow the company the closest, they were the ones acting this morning, buying it aggressively, creating the abnormal activity, and I just jump on board. I ride the coattails of the people that know the most. Now we can do that longer term as well. So again, there's the action candle on this. This is on a 13-minute chart. You can see here, it says 13-minute. So yesterday, November 5th, we had an action candle on Aurora Cannabis, ACB. Again, I know what this company does because it says cannabis in its name, but other than that, I really don't know a lot about cannabis stocks. But what I know is that the people that know it the best were buying aggressively. This is actually post-election, and that stock went up very significantly in the last 2 days. As I said, from $5.60 roughly to $11, it hit $12 this morning. So basically a double in 2 days. All you need to know is to follow the action candle. So what do you need to trade my approach? You need some basic trading knowledge. You need to know what a candlestick chart is, what volume is, that sort of thing. And I teach all of these things, by the way. You need tools. So if you're going to use TradeStation, then having my indicators is going to be a huge help. I've written those indicators. I've paid to have them programmed. I've probably spent $10,000 on programming fees to have my indicators created, not to mention hundreds of hours of testing and development and that sort of thing. And it's really based on 30 years of trading. So a lot of work goes into my tools. The Stockscores website is my other tool. And I should maybe just quickly show that, how it works. I just have to jump in here. Now, I'm not sure if the screen sharing has changed to this screen. Let me just do a new share. I'm not used to using this program, Zoom it, so I usually use GoToWebinar. I think now you should see the Stockscores website. So at the Stockscores website, I can go into the market scan tool and I can run a scan that searches for stocks making abnormal moves. And so at this time of the day, I usually run something called morning movers. So I'll run morning movers US, run the scan, and then look at the charts of the stocks that are found. So here's a stock, MJNA, another cannabis name, very low price stock, but you can see it's coming alive and starting to move, trading abnormally. So this is a great tool because I can cycle through a lot of charts looking for the stocks that are making these abnormal moves. Now notice I'm sort of passing through these very quickly. I'm really only interested in stocks that are making good chart patterns. And so what I teach people to look for is what those patterns are. We're looking for breaks from low volatility with abnormal activity. And so if any of you have attended some of my other webinars in recent weeks, I've done a number of webinars recently, you will know that this abnormal activity is a big part of what I do. So I think we're good for the screen. So those are the tools. And then we have strategies. So I teach my strategies to people. If you don't want to learn my strategy, you have to develop your own. But in order to trade my approach, you can buy access to my strategies through memberships and course material on the Stockscores website. You need process, step-by-step, how to execute your trading strategy. You need capital, of course. I tell people, I don't care if you have $5 million of capital to trade with, you should start your trading with $0 because you should practice first. And so for all of my students that take any of my courses, I always say, start by practicing for a little while and then start with a low amount of risk and slowly increase your risk as you gain experience. You need access to a computer, of course. If you're running TradeStation, you need a little bit more powerful computer. If you're using my website or if you're monitoring my daily webinars called Active Live, where you watch my screen, you don't really need that fancy of a computer. But TradeStation, it will work a lot better if you have a computer that has a solid state drive and a fairly fast processor. And then, of course, you need internet access. That's obvious nowadays. That's easy, but also important. All right, so next up here. What do you need to bring to be successful? Well, you need to work hard while you're learning. Trading is simple, but it is not easy. It takes time to learn. You need focus in order to execute, especially when you're day trading. You require a good deal of focus to do that. And you need discipline to follow the rules. You have to overcome your emotional attachment to money. These are all things that I can help you with. So I'll just talk very quickly about the trader training options, and then I'll take questions. Stockscores offers two courses. The Active Trader course is for day traders and swing traders, and the Investor course is for the longer term traders. Which one you choose is up to you. If you do the Active Trader course, you also get the Investor course, and you can upgrade from the Investor course to the Active Trader course for the cost difference plus $250. All of what I'm teaching in these courses is based on my 30 years of trading experience. I've spent thousands and thousands of hours. I've made tens of thousands of trades over the last 30 years. I do this from a lot of experience. And I've also taught people for 20 years. And I think I'm pretty good at conveying how to do this to others because I've got quite a bit of experience teaching. Some of you may know that I've been hired by banks, by brokerages to train their clients. I've traveled across Canada teaching thousands of people how my approach works. I've written books about the stock market. You know, again, I come from a lot of experience. This is not something new to me. If anyone has an interest in those courses, what you should do is go to the stockscores.com website. I'll show you again quickly. Unfortunately, I've got to keep swapping screens here. Just want to make sure that you're going to see this properly. So if you want to learn more about our courses, just go to the Trader Training menu, go to Learn How to Trade. And there are videos here and explanations of what each course teaches. I'm not going to go into that today. I will tell you the cost though. The Active Trader course is 3,495 Canadian dollars. And the Investor course is $24.95. And you can watch videos and enroll here. We are right in the midst of some live training. I just actually did a little bit of live training this past week. So there are some bonus material right now. You'll get about 3 hours of videos, extra videos that I did this week. And then next week, we're actually doing live market scanning Monday, Wednesday, and Thursday nights. So anyone that enrolls before Monday, you will get that live market scanning included. And it's just a great learning tool. We'll spend about an hour each evening looking for opportunities. And I usually can pick a few stocks that have good potential. All right. So how are we on time? We're just about done. So perhaps now, Stephen, if there's some questions that have come in, if you could read those to me and I will do my best to answer them.
Absolutely. Thank you. Can you share your success rate in the last 5 years and what average position size do you suggest for each position?
Well, position size, I'll address that first. Position size is dependent upon the volatility of the stock. So we actually end up having different positions in every stock. I don't believe in having a stop loss that's 10% from where you buy it. Stop losses should be based on market conditions and the volatility of that stock. So with some positions for $100 of risk, the position size might be $1,000. On others, it might be $40,000. Now, if you have less capital, then you're going to shy away from those position sizes that are bigger. Many of my position sizes are under $10,000, but again, that's before margin, so you can leverage those 3 to 1. In terms of success rate, my strategy is generally around 65% success, but that's actually not the important metric. People always focus on that, and it's actually an error to focus on that, because what's really important is the expected value of a strategy. It's really about how much you make when you are right versus how much you lose when you are wrong. I've seen strategies that are right 90% of the time, but actually lose money because they take big losses. And so when I say 65% of the time I'm right, and this week it's actually been much higher, more like 90%, but it varies over time. But it's all about how much you make when you are right. And so we call that the expected value of the trade. And what we want is a positive expected value. So if your average winner is 2 times risk and your average loser is 1 times risk, and you're right 65% of the time, making 2 times risk, and you're wrong 35% of the time, losing 1 time risk, the expected value of that is 95, which means that basically your average return on risk is about 1 times that risk, including losses. Those are some of the things I teach. I know when I rattle that off, it gets a little bit confusing, but that's a big part of what I teach is risk management. Next question.
Thanks. How little do you need to get started?
Well, again, as I said, if you have $10 million, you should start with 0. So when you're learning, you don't need capital, you're learning. I know what the point of the question is. Can you start with $100? Not really, because you can't buy a large enough position. $1,000, still difficult because you're not buying large enough positions to justify the transaction costs and your time. Now, if you're position trading, yeah, you can start with $1,000 because you are taking longer term trades that take time to develop. I think for day trading, at least $5,000 is a good number, and you're going to triple that with leverage. So you'll be able to use $15,000 of buying power. But again, no matter how much capital you have, I really encourage my students to start small so that they can gain experience and gain confidence, and then start increasing your risk tolerance.
Thank you. Does your program scan for pre-market moves also?
It can, but I don't encourage people to do that. Yes, we can use TradeStation to look at pre-market action. I find pre-market is often misleading, so it's not something that I do, but it's possible the tool will do it.
Thanks. Using your system, what's your opinion on SE, Limited?
Unfortunately, because I have to flip back and forth, I can't really pull up charts here. So I don't want to get into looking at a whole bunch of different stocks because it's a little cumbersome with the way this Zoom software works. So maybe we'll just stick to more general questions.
Can anyone sign up for Active Live for November?
So this is the screen right now. Active Live is a service where you're watching my analysis screen. I pick stocks in the opening half an hour for you, and then at the end of the day, I review trades for you at the end of the day. and it's a great learning tool. It is only available to people that have taken my active trader course. I actually don't want a lot of people in this service, because if there's too many people, it takes away the opportunity. So Active Live is $195 a month Canadian. However, you must first take the active trader course. Now you can take the active trader course today and start Active Live tomorrow. That's fine. Although I do encourage you to make sure you learn the material a bit first. But in answer to the question, no, you cannot access Active Live unless you are an active trader member of Stockscores.
Thank you. Does your subscription actually tell us what and when to buy and sell?
I teach you how to know what to do. I give you examples every day. I answer your questions on what to do, but I am not a licensed investment advisor, and so I cannot tell you what to do. I'll teach you how to do it. It's the old adage of give a man a fish and you feed him for a day, teach him to fish and you feed him for a life. I want to teach you how to trade. And again, I do this every day on Active Live. I pick stocks every day. I picked PLTR today. I picked ACB yesterday. I picked Solo yesterday. Yesterday, the average RR of the stocks picks that I made were +3 there were 6 of them, or 5, 6, I think. So I'm helping you every day and I'm telling you what I'm looking at, but I will never say, Joe, you should buy this, because I'm just not licensed to do that.
Thanks. Do you use options in your work?
I do not. Many of my students do. Many of my students will leverage with options, but I personally do not trade options. I don't need the leverage, and I just prefer to trade the individual stocks. But like I say, many of my students will, if I'm buying Apple, they're buying options on Apple because it takes less capital.
And can Canadians get access to TradeStation?
You can, but you have to subscribe to it. And so if you want to subscribe to TradeStation, go on to Google and search for TradeStation subscription. Because if you go to the normal TradeStation website, which is opening a brokerage account with them, it will say that you cannot open an account because you are a Canadian. If you want to subscribe to the platform, you can. It's $99 a month. And again, nothing to do with me. I get nothing for saying that. That's what I use.
All right. Well, that's all the time we have for today, but thank you very much. It was a fantastic presentation.
Thank you very much. And everyone, hope that you have a great trading day. Bye for now.
And as a friendly reminder to everyone, we have profiting from the coming disruption in one of the world's largest industries coming up at 1:20. Thank you.